In this video, we will trace what happens when you place an order to buy or sell a stock, with the hope that it enlightens this process and makes it easier to understand. Suppose you want to buy 1,000 shares of the Coca-Cola company, the stock symbol for which is KO. You look online and you see that the shares of the Coca-Cola company are trading for $40 a share. That means, by the way, that the last trade was for $40 per share. That doesn't mean that the next trade will be for $40 a share. That's an important distinction, and we'll get into why that is in just a moment. So let's say you think that the stock is actually worth more than $40 a share. What do? Well, if you think it's worth more than $40 a share, you want to buy because you're going to buy low and sell high. So what you do then is you log into your stockbroker's website, or you call them up and you place an order to buy, let's say, 1,000 shares. Let's say buy 1,000 shares at roughly $40 a share. So immediately you're faced with a decision to make. Do you want the shares as quickly as possible, ignoring the price? Or do you want to ensure that you don't pay more than a certain amount? In that first scenario, you are time sensitive. You want the shares as soon as possible, but within reason, you don't really care how much you're going to pay. In this case, you're going to do what's called a market order, where you'll just take whatever prices are available in the market. If you're price sensitive, you'll place a limit order. A limit order will send the instruction to pay not more or not less than a certain price. In this case, it's a buy order, so the limit will set the maximum price at which you're willing to buy. In either scenario, there is a possibility that you are unable to execute your order, but you are much more likely to get filled with a market order because you are, like I say, time sensitive, price insensitive. So let's continue with a market order. Let's say you want to get in as soon as possible. So you choose that market order. What happens? You log into the website. There's your computer screen. And it's an old school computer because I'm old school. There's your little floppy drive, maybe like a CD-ROM drive and like a little power button. Anyway, there's your old school computer and you're on the website for your broker. You send the information to your brokerage firm. Your brokerage firm, by the way, is probably a large bank that handles these things. Might be an online brokerage firm, but might also have a brick and mortar presence. So your brokerage firm, there's its flag. Your brokerage firm has a broker who is the agent of the brokerage firm sitting on the exchange pit. So we wanted to do a market order. So you've sent your broker the instructions to buy 1,000 shares of KO and pay market. So what happens? The broker goes to the exchange, let's say in this case it's the New York Stock Exchange, and asks all the traders in the exchange at what price are they willing to sell shares of Coke, specifically 1,000 shares of Coke. Actually, I'm going to back up. So let's say you want to get in as soon as possible, so you choose a market order. In any case, the broker then solicits offers from traders and market makers who are also on the exchange floor. Remember, you're looking to buy, so you want the best offers to sell from the market, right? You want to see where people are willing to sell. In an open outcry style pit, the kind that you might find in a movie like Trading Places, and let's imagine that this is the kind of trading pit where your order is being routed. Now let's suppose that there are 3 market makers. You have these market makers and other participants that are indicating their willingness to sell by responding with their prices and the numbers of shares that they're willing to sell at that price level. So we have these 3 market makers here, and they're all standing ready to sell you shares of Coca-Cola. So let's say the first market maker says that he's willing to sell 100 shares of Coca-Cola at $40 a share. Let's say the next guy says he'll sell you 500 shares KO at $40.25 a share. And let's say the last guy is willing to sell you 1,000 shares of KO at $40.50 a share. So what happens now? You want to buy 1,000 shares of Coca-Cola at the market. What's going to happen? You're going to want to pay as little as possible. So in this case, your broker will approach the first market maker and say, hey, you're willing to sell me 100 shares for $40. You're the cheapest price. I'm going to buy from you first. So we'll take all of yours. Now I've only got 100 out of my 1,000 shares. I still have 900 shares to buy. All right, who's next? So then your broker will go to the next market maker and say, hey, you're the next cheapest seller of Coca-Cola, but you're only willing to do 500. So I'll buy all 500 that you're willing to sell. I'll do that. And then I'll buy all 500 that you're willing to sell. I'll check that one off. And now I'm left with 600 shares. I need to buy another 400 shares to fill my order. So the next guy is willing to sell 1,000 shares, but his price is a little bit higher. It's $40.50 a share. So I'm just going to buy the remaining amount on my order, 400 shares. I'm going to move this drawing over and give myself some space here. Looks like the M didn't go with me, but that's okay. So we pay 40 per share times 100 shares, a total of 4,000. So we pay $40.25 a share to the second market maker for 500 shares, a total of $20,125. And we'll pay $40.50 share times remaining 400 shares. And that total is, so the total amount we outlaid was $40,325. To summarize what just happened, your broker has purchased on your behalf 100 shares for $40 a share, another 500 shares for $40.25 a share, and the last 400 shares for $40.50 a share. And your total outlay was $40,325, and your broker probably will charge maybe a $10 commission, let's say. I totally just made that up, but let's say commission. Your total outlay was then $43.35 for 1,000 shares KO, or an average price of $40.335. The market's not going to see this $10 commission, but you spent $40.33.5 a share. Market's going to see $40.32.5 a share. So when you go back to check your price on, Google Finance or Yahoo Finance, once this trade has posted, you'll see that the price now reflects this last trade. It'll say $40.32.5. So this is the end of part 1, and we're going to talk a little bit more about what's going on in the background in part 2.